Randy, is another 75-pointer really assured come November, given that FOMC meeting is in such close proximity to the midterms? And if unemployment does continue to tick higher, politically, that's going to be a tough sell, isn't it?
So I think this is because of the politics, in addition to maintaining credibility, it's really important for the Fed to be moving fast. They're very fortunate that the unemployment rate continues to be below 4%. It's rare that a central bank can raise interest rates as much as they have, and certainly rare for the Fed to be able to do that with the unemployment rate staying so low. So, of course, people are not happy that there's a threat of higher unemployment, but when the unemployment rate is still relatively low, they're not getting the same kind of pressure. If they were if the unemployment rate were up 4 or 5% to 4 or 5%, and they were still trying to raise rates significantly, they're going to get a lot of pushback. If they raise rates and then kind of hold it in the 4 to 5% range as the unemployment rate's going up, it's going to be easier for them to hold than to face the pressure when they want to be raising when the unemployment rate is so high.
Let me frame the question in a different way. Okay. Under what economic scenario would the Fed consider a pivot?
So I think you'd have to see the inflation rate come down very significantly for a significant period of time. And so one of the things that's going to affect whether the Fed goes 75 or 50 at the next meeting will be that personal consumption expenditure index report that comes out on Friday. That's their favored measure. And so they're going to be looking very carefully at that, and not only at that, but also the so-called core measure that takes out the energy and food components.
What do you think PCE is going to tell us on Friday, Randy?
So there have just been some, in particular, so what we've been seeing is the headline number has been coming down. So what includes energy, because energy prices over the last few months have been coming down, and so that's been coming down. Yes. The thing that sort of spooked the markets a bit, and I think has concerned the Fed, is that the core number for CPI, for Consumer Price Index, didn't come down, because when you take out food and energy, what's the main thing that people spend money on? Well, housing. And the way in which we calculate that in the U.S. is through rents. It's owner equivalent rent. What would you pay in rent to yourself if you were your own landlord? And rents tend to be more lagging and coming down, although we've just gotten some reports that suggest rents are starting to turn down. And so I think core is going to be slower to turn down, but I think it will start to turn down this fall, and that's going to be the key thing that will be driving their moves.
Andy.